Good morning or good afternoon, wherever you are at. Let me know if you could real quick that you can hear me loud and clear. Camera going here just a second. Hopefully, where did that go? Hopefully my new kitty cat will settle down a little bit. Tried to wear her out, but awesome. Thanks, Trip. Hey, how we doing? She's been going crazy the last half hour, just running around going nuts. So anyway, I'm still getting used to the whole having an animal in the house. It's been quite a few years. So, but she may make an appearance. We'll see. I get a dog, but they're too much maintenance. It's like having a kid. I've already got enough of those. Welcome out to Trading Coaches Playbook. Okay, good. Thank you, Samuel. Whew. That was a, I had to look at what you typed there for a second because I'm like, did you miss a letter or is that, I think that's supposed to be good morning. It threw me off for a second. What do you mean? What am I saying, Brenda? Can you not hear me? Oh, about dogs? Oh, I'd like to have a dog. I used to have a dog and a cat. I've had a couple of cats. I've had several cats, only a couple of dogs, but they're a lot of work. They need baths, they need this, they need that. Cats are easy. They're low maintenance, they take care of themselves, they bathe themselves, they don't stink, they're clean animals. I mean, dogs can be too, but there's a lot more work. And I don't want to put that much work. And then if I want to go somewhere, you know, dog, kennel, all that stuff, it's just a pain. So cats are easy. So can leave them if I'm gone just for a few days. I took ours went to my parents' house the week before last and took the cat with because we were going to be there for a week and it was hot here. And we're going away this weekend too, but it's going to be super hot here and I don't have AC. So, because there's like a week, maybe 2 weeks a year where we need AC out here in Seattle. It just doesn't get hot very often. So people freak out. It's like, it's only a couple of weeks and then you go back to 70s and 80s. It's fine. So, but let's get the disclaimer out of the way. I'm not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If we do talk about specific trades, just assume that we're talking about a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So let's see what's coming up here in the next little bit. Inner Circle on the 11th. Let's see, this is all, I think, August. Yeah. Monster Market Movers is on the 17th. Patterns and Flash with yours truly is on the 18th. And then Trade You is the 24th. If y'all, I do see a few names that I don't recognize, but that's one thing I hate when these programs take over your screen and you can't get behind it. I'm trying to figure out. Okay, yeah, that's a Thursday. So my Patterns and Flash class, if you haven't experienced Patterns and Flash yet, then I would suggest getting it and get it. Well, what is today? The 5th? Because here's the beauty. Once a month, I do a 1-hour class, live class, kind of like just like we're doing here, but it's just for subscribers to the tool. And as you know, you have 2-week trials with pretty much everything we have. So if you do a 2-week trial to Patterns and Flash, that's 13 days. So if you started it today, you'd be able to catch that August 18th class. So if you like what we're talking about here, if you like the charting stuff that I do and you want to learn patterns and just general charting, you want to master it, then get Patterns and Flash, and then you can come be with me on the 18th. Thank you, Bethany. There is the link. So that will get you set up on the trial. So Trade Use 24th. I don't remember if I'm doing that one or not. I think I am. Yep, I'll be doing that one on the 24th. And then E-mini Think Tank, the 25th. And of course, mastermind groups are Tuesdays, right? 8 to 9. The Power Hour, Trading Coaches Playbook, what we're doing now, and then How to Trade the Market is on the 17th. And then, of course, the other stuff down there in the bottom right, Power Option Plays, Tuesdays and Saturdays, Cover Call Explorers on Thursday, and then E-mini Think Tank with Brandon Monday, Wednesday, and Thursday in the morning. So, how are we? Hey, I like the market this morning. It's kind of crazy, huh? I was frankly kind of shocked that I expected unemployment to tick up. The fact that it ticked down was a little bit surprising. Yeah, I expected to go up to 3.7 or 3.8, not stay at 3.6, but it ticked down to 3.5, which again is interesting. So, of course, there's all the social stuff you can follow on a lot of the social media platforms. There's that crazy mug. So patterns and flashes, like I said, it's what I created years and years ago. So let's see, Samuel. Oh yeah, Samuel, hopefully you're not gone. I believe this is posted on YouTube. I can't remember when. It used to stream. I don't know if it still streams on YouTube or not. I know it was when we first started doing it, but I don't know. I haven't looked to see if it does. So Samuel, if you're still here, then yeah, I believe they put it on YouTube after a few days. The tech team, I can't remember what they call it, IT guys, whatever, the nerds. Sorry, Sean. They go do their thing, and then they post it up there at some point. So if you're still here, hopefully you heard that. If not, then hopefully maybe Bethany, if somebody could reach out to Samuel and let him know that where he can get that. My coffee's already cold. So we're going to talk briefly about recessions. I don't want to get too deep into it. It's not something that, I mean, I don't know a ton about it. It's interesting now that it's popped up again. I've read up a little bit on history and stuff, but and there's definitely a lot of interesting history about different recessions. And I thought about putting a bunch that it's like, you know what, most of what we need to cover is basically charting, but I thought, it's a good idea to have a big picture perspective. And since we are officially in a recession, if you accept what has been pretty standard definition for the last 4 billion years of 2 quarters of negative growth. But now, and there's always been kind of a debate about it, and it doesn't matter what you call it, things are shrinking. There's a contraction going on. So potato, doesn't matter to me what you want to call it. But yeah, we're in a world now where people want to redefine things to feel better about themselves. It's like, I feel better about something. I don't know what they're trying to feel better about. I don't understand it because I live in reality. And it's like, if something bad happens, it happens. It doesn't matter how you dress it up. Okay, Brenda, give me a second. I just thought of something too. This is, and it takes me back to when I was young and stupid. Speaking of dressing it up, and man, I haven't thought about this for years. I worked when I got out of high school, I had to work in a tire shop. And I don't remember who did it, but one of the guys there took a bunch of rubber shavings, right? It comes off of tires and, it accumulates, and I don't remember where it came from, but somebody scooped up a whole bunch of it, took it home and had their wife make a cake out of it as a prank. And so, and then they put frosting, like real cake frosting, over this rubber cake. And I remember somebody was like, "Oh, there's cake in the lunchroom." So of course I went, there were pieces there, and I took a bite of it, not even noticing it. It just looked like chocolate cake. I don't know how they did it, but it looked like a chocolate cake. And it had frosting and everything. And I took a bite of this thing. It was like, it's rubber, right? Nasty tire rubber. It was black, right? So it looked like it was, I don't know how they did it, but it was a darn good prank. And I wasn't the only one that got taken, but yeah, exactly. It is gross. Especially, I mean, it's old tires. It wasn't from new stuff. It's not like it was new rubber. The stuff that had been on cars and somehow got shredded up. I don't remember what for, but yeah, it was pretty nasty. But I also was laughing, especially all these years later. What's that, 30 years ago? I laugh even more about it. So that's good, William. That's the kind of cake you eat during a recession. Yeah, when you scoop up the scraps from, right? Yeah. Well, thankfully I'm still alive. So for now, maybe that'll come back to bite me. Who knows? All the toxins in there. Yeah. Dang it. Yeah, I mean, this made me think of that, because you could put all kinds of great frosting on top of a rubber cake and it's still a rubber cake and it's still nasty, right? So I just realized I forgot to turn my phone off. Let me shut that off so people don't bother me. So yeah, like I say, I don't care what you call it. You want to call it a downturn or recession, whatever. So the difference between inflation and recession. So inflation is, wow, I don't know what the technical definition is. It's basically when prices of goods are rising, typically because of supply and demand imbalance. Right? If there's a heavy demand for something and not a lot of supply, then people raise the prices, right? It's really no different than stocks, right? Stocks go up when there's a demand for a stock and there's not a lot of supply, or there's less supply than there is demand, then the valuation, the price goes up, right? That's what makes a stock run up, is supply and demand. More demand than supply, price goes up. When there's more supply and people start to sell and there's not as much demand, the price comes down, right? Because people don't want to buy it. So it comes down to a lower level. Inflation is nothing more than a stock, just like a stock going higher, right? When prices at the store, I mean, you go buy your milk now, it's $5 a gallon instead of $3, or, depending on where you're at. But fuel, a year and a half ago was $2.5, $3 a gallon. Now it's 5 or 6 or 7. So it's just the demand for something increasing, so people increase prices because there's not as much supply. So, which is what happens when the Fed prints money and they throw a bunch of money at people, and people start buying everything because they have excess money and they're sitting at home not doing anything. They're not working, right? So what am I going to do? You go shop on Amazon, you go open a Robinhood account, you start trading, you take all that money that you're getting from Uncle Sam. I mean, my neighbor was making more money staying home than he was working. It's like, okay. And he did the same thing. He started trading crypto, buying all this stuff. And so you had this massive push of people buying things because they had excess cash, because basically the government printed a bunch of money and just handed it out. So inflation is the natural thing that comes from that, right? It's like, I heard an analogy, I think it was last week or the week before. If you take Monopoly, right? You sit down and play a game of Monopoly and you have a certain amount to start with, right? That you get the 5 1s, 5 10s, and then imagine if you doubled what everybody got right out of the gates. Now people have got a lot of extra cash, and when you land on a property and you've got a lot of extra cash, what do? You're just going to buy it. I've got excess cash. Why would I sit on cash? I could buy this property and start collecting rent. So if you've got a lot of excess cash, then you go buy things. I just played Monopoly with my kids about a month ago, and I ran out of cash pretty quick because I landed on properties I liked, so I bought them. And then all of a sudden, I've only got a couple $100 left. It's like, okay, I better get past go a few times and collect some more cash and collect some rent so I can invest into other properties. But imagine if you double that, then I wouldn't have had to pull back and stop buying because I would have had excess cash. Make sense? So that's inflation, right? Recession is nothing more, and again, it depends on whose definition you want to take. The standard definition that's been used for decades. Even I just saw somebody posted in a Series 7 book. When you go to get your Series 7 license, which is for a stockbroker, right? It defines, it's a very 1 line or 1.5 line definition. A recession is 2 quarters of negative growth. So when the GDP comes out and it shows the growth, the overall economic growth of our economy, if it's negative, like the first quarter of this year was it negative 1.6? What did it finish out at? I think it was, or was it 2 something? I think it came out initially at 1.6 and it finished at 1.8. I mean, they always adjust it. They come out with their initial reading and then they adjust it over the next month or 6 weeks and come out with a modified. And then they have the final one where it's like, okay, this is what it actually was. So the first quarter of this year, the economy contracted. In other words, the overall economic output shrank. And last quarter, the second quarter of the year, same thing, right? The initial reading came out at negative 0.9. So now we've got 2 quarters of negative growth where the GDP, the overall economic output, is actually shrinking, not growing. So when you have 2 quarters back to back, that is the technical definition. Well, as far as I'm concerned, it's the official definition of a recession. There's other people that are trying to, and they have the NREB. They do have other, what's the word I'm looking for? I want to say conditions, whatever. There's different gauges they use to say that we're officially in a recession. But the NREB also is usually about a year behind the recession. They're more of we're going to study what happened after the fact, not we're going to call it when we're in it. So, and some people say, well, low unemployment means that we're not in a recession, whatever. most people define a recession as 2 quarters of negative growth, plain and simple. It's easy to measure. It's simple. It's neat. It's clean. It's not ambiguous. It's just boom. It's not subjective. It's objective. If you have 2 quarters of negative growth, it's a recession. So, and that's what I'm going to call it. So, oh, I just saw your price gouging. No, not price gouging at all. I know that's a convenient political term that some people like to use. And it's happened before. There's no doubt that and I'm sure that it does happen to a certain degree. But yeah, the thing I find about it that I think is laughable is if you look at, and I just saw this somewhere a few weeks ago, if anybody, and again, I don't want to go too political, but if anybody's a price gouger, it's the freaking government, right? Because last quarter, I think it was either Exxon or Chevron, they came out with their earnings. And when you calculate how much they make, their profit that they got out of each gallon of gas, I think it was Exxon, whatever it is, I'm sure they're really close. Their profit was between 6 and 7 cents per gallon of gas. That was their profit margin. So you're paying $5 and they're making 6 cents. The government, the federal government, I believe the gas tax is either 17 or 29 cents. I can't remember what it is. I think it's 29 cents, I want to say, because I remember thinking it was like 3.5 or 4 times what Chevron and Exxon make. So here, the companies that produce the oil, they go into the ground, they invest their money, they go to the ground, they dig it up, they transport it, they do all that stuff and get it to the pump for us to use. They're making 1%. And the government's taking, what, 5% of it? And what do? They don't produce anything. They just sit back and take it, right? So I don't, you probably tell what side I'm on, and I don't care. It's one of those things. I'm more of a libertarian than anything. It's like, just leave me alone. Get the government out of my life. Don't tax me to death. So, and in Washington State, we have one of the highest state taxes too. So it's something like, I think 25 or 30 or a third of the price you pay at the pump is actually taxes, something like that. I don't remember what it is exactly, but it's a massive percentage. If they would cut, that's why they were talking about when prices got up to 5, they're talking about a gas tax holiday, which is going to reduce what, 20 cents? I mean, but still. So yeah. And I don't doubt that there's some gouging going on from some places, but I think generally speaking, I think it's pretty rare. So, but let's get to the topic of the day. And we're going to go through this relatively quickly, and it's kind of just an open forum. If you want to chime in or say anything, these are some I found. Basically, there are 12 typical causes of recession. So, and some are happening and some are not. Loss of confidence in the investment and the economy. And there is no doubt that is happening right now. Consumer confidence. I can't remember what the reading was. I don't know what the actual number was, but I remember them saying it was one of the lowest readings ever, I believe. So that's definitely a cause. High interest rates, which it's even though historically interest rates are not high right now, in the short history, interest rates are very high. They've basically doubled in 6 months. So the way I see it, at least right now in the short term, we're going to be kind of have this hangover, interest rate hangover, where in January, the average rate was 3.22 for a mortgage. Excuse me. By April, that was over 5. It was like 5.25 or 5.38 or something like that. So from a buying power perspective, at least this is the realtor that I know, he sent this to me. It was in January. If you were looking for a $3,500 mortgage, in other words, you say, okay, I can afford a $3,500 mortgage, you could borrow $800,000 at the interest rate in January of 3.22. In April, 4 months later, that five something percentage rate gave you purchasing power of 640 or something, basically 650. So just in 4 short months, you lost 20% of buying power, and the rates have gone up a little bit more from there. So people's buying power for real estate is off by about 25, if not 30%, and most likely going to continue to rise. So the cost of credit's getting more, which means naturally that the housing market is going to correct, no doubt. The question is, how badly does it correct? Does it correct big time or just a little bit? And it's already starting, right? I poke around on Zillow once in a while, just looking, see what's out there, curious. And beginning of this year, you look at like the red dots in certain, like I look at certain areas, there's only 3, 4, 5, maybe 10 red dots. Now there's like 40 or 50. So, which is what I expected to have happen. All these people are like, hey, I got a bunch of equity in my house, let's sell it. So if you've been thinking about selling it because of all the equity you have, and you waited, now you're launching it onto the market and everybody's launching at the same time. So you dump this huge supply on market, what's going to happen then? And then demand dries up too. And this has happened with retailers. That's why Walmart and Target both came out and they stocked up on demand. They stocked up on tons of supply because of the supply chain issues and all that. So they bought a boatload of stuff expecting demand to continue. And all of a sudden, because of inflation, demand dried up and people aren't buying anything anymore. So they have this massive glut of inventory. And now what do they do with it? They don't want to sit on it, right? In retail, it's all about turn. I mean, I've never been in retail other than the tire business, but it's how quickly can you move a product in and out? It's just like trading, right? We get into a trade, we want to be in and out like now. We want to get in now and have our 300,000% profit in 5 minutes. That's what we want, right? But you got to wait. So, I mean, the housing market is going to naturally correct because of that, because people only buy what they can afford on a monthly basis. So if your buying power goes down, you're going to buy less house. So you're either going to start, so the lower end of the market may actually still do well, but who knows? It's hard to say, right? You never ever know what's going to come or what may happen. So things are always changing, and every recession is a little bit different. Stock market crash, which we haven't really had. I mean, we dropped off a bunch. I did hear, and I didn't verify it, but I heard somewhere that this is the worst first half year start since, I think I heard like late 1800s or something, early 1900s, as far as like the market goes, which I can't remember exactly when the actual exchanges started, but it's supposedly one of the, if not the worst first half starts in decades, if not a century. So I think it's even worse than 29, if I remember right. But so the question is what happens next. So I think I'm starting to think we're going to go sideways for a little bit. We might have a little more upside. Where are we at now? I wouldn't be surprised to see the markets run up and hit their 200-day moving average. 1870, 1880. Oh, those are years. I'm thinking numbers. Sorry, I was just looking at charts. I'm thinking number. I'm thinking like, I was thinking the Russell, because the Russell's at 1900. And my mind went to the Russell because I've been traded the last few days. yeah. 1870, 1880. Sorry, hold on. I thought I had that cough kicked. It's weird because I haven't had it for a while. It just kicked up this morning. Apparently it wanted to all show off for you guys. Yeah. So the question is, what does that mean? Does it mean anything or not? Or is it just, we had a bad half of the year because of how things are going? So we'll see Diane. Yeah. Yeah. And I've seen that around here too. Diane says she had a client who's a luxury home builder in Michigan. 4 projects that basically got pulled. There's one here in Seattle too. It's the only one I've seen about. I'm sure there's more. I don't keep that close of tabs on it. But there was some high rise being built in Seattle that they just yanked too. They just stopped construction on it. It's on pause. It's been on pause before, and I don't know why. I can't remember what the reason was, but it's supposed to be like a 30 or 40 or 50 story building going up. And they just pulled it. So, and I know home building, I mean, if you look at the numbers from that whole industry that's been coming out the last 3 or 4 months, new starts are off. A lot of home builders, at least it looks like to me, just from like when I go to drop off my kids, there's a neighborhood going in right by their school. And it seemed like about 3 or 4 months ago, they had barely even started some of these. They had broken ground. And all of a sudden they're up. It's almost like they're scrambling to get them built and sold as fast as they can, because they know that the valuation is going to come down. They have to start lowering their prices. So they're trying to capitalize on the peak of the market, is the way it appears. But so yeah, there's no doubt the real estate market is slowing, and whether or not it crashes, I don't know that it will crash like it did in 08, but who knows? Falling housing prices and sales, that's basically, we just covered that. Manufacturing orders slow down. I'm not sure. I know there's the ISM, and there's other manufacturing data that comes out. I don't really pay close attention to it from an economic standpoint, unless I was going to be trading, some manufacturer. But even then, I don't really look at the macro data for manufacturing stuff. So I look at the chart. Chart pretty much tells me what I need to know. And I don't know what, maybe some of you here know what the data was that came out. I know there was the PPI came out, the Producer Price Index. I remember seeing that, which is inflationary readings, right? And that was up. So manufacturers are also having inflation, which means they have to raise their prices, which means by the time it gets to us, it's even more expensive. So there's definitely, I did read an article last week about beef and how ranchers and beef producers are cutting back on the head of cattle they have, which means that beef prices in a few months or a year will be higher than they are now. And they've already gone up quite a bit. They're going to continue to rise because the supply is being cut. Now, going back to your price gouging or manipulate, people say it's manipulation. Well, I know that same realtor actually that sent me that thing has a little farm, and he raises pigs. And just about, maybe 6 months ago, because I bought one from him, he raises them really good and clean. And there's some kind of, they're a special breed. I can't remember what they are exactly, but no doubt they're delicious. I've still got a bunch in my freezer. I had to buy a new freezer. Actually, I didn't realize how much I bought a whole pig. It was like, so I got a bunch of bacon. I've got a ton of stuff, but I had to get another freezer to fill it all. But he cut his production. And I was like, so is it just, what's the purpose? I mean, why are you cutting he's cutting like 90%, not just a little bit. So like if he's raising 100 pigs, he's down to 10. I don't remember what the numbers are, how much he's actually raising, but, and he says it's just the cost of feed and everything else. The costs have gone so high that they can't sell it at a price where they can make enough profit. And I think the other thing, he was looking for a new ranch hand. I know he was trying to hire somebody. I don't know if he had one that left, or I think he was mainly just trying to take a lot of the workload off of his back because he was doing a lot of it and running a real estate firm as a broker. And he's got several agents. He's got a pretty big agency. So I don't know if he couldn't find somebody to manage the farm for him and he just couldn't do it anymore. I'm not sure exactly, but the main reason that he cut production was because of the cost of the feed and all that stuff has gone so sky high that he's not going to turn a profit. And farming is not really hugely profitable to begin with. So I guess you could tie it into manufacturing. So beef's going to get more expensive because they're cutting because they can't afford to feed them and still sell them at a price, right? Deregulation. This was interesting, actually. I'd never seen this before. So apparently when you deregulate, going to Wendy's. You're old enough for that? Remember Wendy's? Where's the beef? I never really thought about deregulation being able to create a recession, because at least most of the times I've seen deregulation, it usually is a good thing. Maybe not in the short term, but typically if you open up the free market and unregulate it, then usually things go well. But who knows? I mean, that's where the telecom industry came from, right? Poor management. This is with regard to like companies managing the, talking more like Enron, Bear Stearns, some of the financial ones that took on too much risk with the mortgage stuff back in, 07, 08. I don't know how much of that we're having right now, if anything. I mean, I don't see any headlines with people coming out and saying that, there's no companies dying because stuff like Enron or, taking on too much risk. I'm sure there they're just not big enough to make the news or be headlines. So wage price controls, we definitely don't have that, I don't think, right now. And interestingly enough, apparently this has been done quite a bit over the years. And I think it was Gerald Ford that they said was the only one that ever had a problem with it, trying to cool off inflation and wage price controls, and ended up having to lay off a bunch of people because they locked in these prices and people couldn't, they couldn't reduce their workers' pay. So they just canned them. It's like, how do you not figure out that that's what's going to happen? I mean, if you're a company and you have to make a profit and you say you can't lower your employee's salary, you can't do anything to cut your cost, and then you put on price controls and you can't sell it for anything more than this, you got to do something. Otherwise you have to close the doors, right? It just doesn't work. So I've never understood that one, but apparently it's happened quite a bit in history. So post-war slowdowns, this was, if we have a war, and that's the crazy thing, is that wars are actually very bullish. It creates a lot of economic activity, right? You got defense contractors, they're getting big contracts from the government, and the government's spending money, and people are working now. So conspiracy theories, governments like to start wars because it's economically beneficial. I don't know if that's true or not. But there's no doubt that it can be, in the short term, it can be good. I think long term it's not, but that's my opinion. Credit crunches, this is something we saw in 2007, 2008, and 2009. And I think we're probably headed for another one of these, maybe not as bad as then, but hard to say. In 2020, there was the biggest recorded credit card payoff in history. So what happened is all these real estate valuations are high. People are refinancing their homes, taking out cash, taking a super low interest rate, and then paying off their credit cards. So it had this massive, massive influx of cash into the banks. And of course, they want to loan again. So now they're loaning it back out. So we had this massive payoff of credit cards in 2020. 2021 saw the largest increase of credit card usage. And I just saw yesterday that we are now, as far as household debt, we are at a record number. Nationally, I mean, from when you look at the entire country, how much household debt we all hold individually, but as a country collectively, we've hit a record high, which a lot of that comes from, home prices. If you just bought a home and you bought it, in the last year or two, you're paying premium prices because of low interest rates, right? So you got a bigger home debt. So some of that kind of makes sense. But there's also this massive credit cards also, I think, if I remember right, 2021, we had the biggest credit card spend. So you got the biggest payoff in 2020, the biggest credit card spend in 2021. So people take the equity out of their house, they'll go pay off the credit card, and they're, oh, let's go on vacation. It's opening up again. We can go fly somewhere. Now that we can go somewhere and the market's back, let's go. And they spend money on credit cards. I don't know if that's, I know some people that do that. I used to do that when I was young and stupid. So yeah, it's questionable how that's going to affect the overall economy. I mean, if unemployment stays low, but if people start getting laid off, which a lot of big companies have started to mention that. I know the mortgage industry is getting laid off. I've got friends in that. They're laying off pretty heavily because new mortgage applications are off, 40% or something like that. I think was the last number I saw. Refis are off like 80 or 90%, which is no surprise. If you refied in 2020, why would you refi again? Right? So the mortgage industry is already struggling. And with interest rates looking like they're going to continue to rise, I don't think it's going to improve. So that's not necessarily a good thing for that industry, but that will trickle down too. Because like Diana said, even luxury home builders, people don't want to spend. Even people that have excess money are concerned. The people that can spend it are concerned. But it's the lower end. The inflation is really killing the lower end. I mean, I've read several articles from several different places that food banks are they're busier than ever. They're seeing record numbers because you got the people on fixed income And the lower end of the economic spectrum, inflation's killing them. They're spending $300, $400, $500 a month more than they were before. So it's killing them. It's a hidden tax is what inflation is. That's probably the best way to define inflation. If you want to go back to your question, Brenda, inflation is a hidden tax, and it hits the lowest end the hardest. People that have money, if you're making $250,000, $500,000, $1 million a year, an extra $500 a month doesn't break you. But if you're making 40 grand a year and you're just getting by, an extra $400 or $500 a month out of your pocket for food and fuel is destroying you. And that's part of the reason the credit cards are up a bunch. There's people that are starting to live on credit. They're paying their everyday bills on credit because they don't have the income to cover it. And I think they're hoping that things are going to turn around and prices will come back down, but I don't see that happening. Yeah, well, it's not really hidden, I guess. It's called inflation, but it's essentially a tax. And the sad reality is that there are, depending on how conspiratorial you want to get, there are some that the government does it intentionally. Because if you look at the revenues to the federal government last year when inflation was raging, it still is. Because what happens? Inflation goes up, so prices of things go up. In Washington, we have a sales tax. So if I'm buying something and the price is higher, I'm paying higher tax. So the tax revenue actually goes up to the government. If you have an income tax and incomes are rising because employers are raising wages so that people can live, right? And then they have to raise their prices in the end. So it's just like this crazy spiral. But inflation increases typically the revenue to the federal government. So there's some that will argue and give you this theory that the government creates inflation intentionally so that they collect more tax revenue. And last year, if I remember right, they had a record tax revenue last year, even though inflation's raging and people are suffering. So yeah, it's essentially a hidden tax. I mean, it's just common sense. You look at the lower, and that's the worst part about inflation is it does hit the lowest end of the economic spectrum the hardest. If you're retired on a fixed income, your income's not going up. And if it does, it's not much. So you're losing buying power big time. So a lot of people are having to adjust their lifestyle in a big, big way. So anyway, but when asset bubbles burst, asset bubbles, I got a little ahead of myself. I'm gonna go. So this is the crazy part too, is you got a lot of bubbles going right now. The four main, you talk about real estate, you talk about stocks, you talk about bonds and commodities. Those are the four major asset classes, right? Commodities just essentially kind of burst. If you look at it, copper was down. There was an interesting article I read a few weeks ago. The price of copper and the direction copper is going, that it's trending, has predicted the last 8 or 10 recessions, I think it was, something like that. Because copper is used in so many things, right? It's used in homes, right, for piping, and cars. Electric cars actually use like 5 or 10 or 20 times the amount of copper that a gas vehicle does. So, which actually would prop up the cost of copper if people keep going electric, but it's used in just about everything, right? So if copper is trending lower, then that's a good big picture perspective that if the demand for copper is going down, the demand in every area of our life is essentially going down. So, and copper's been trending lower, even gold's been going lower, even with inflation, which seemed weird. I don't know about the actual gold, but I know the gold companies, NEM's got hammered, which is one I traded 6-8 months ago when it ran to the upside. I missed the big move, but I still caught a piece of it. But yeah, NEM just got destroyed. It went to like 40 or 45 bucks. It was 85 or 90 just 6 months ago. And stocks, it hasn't really burst, but it has. You look at the tech industry. When you look at Peloton, what's it at? 10 bucks. Last I saw it was 10 bucks. It was 170 a year and a half ago. A lot of these tech stocks are off 80, 90%. So, and then bonds, if bonds burst, which it sounds like, I don't know. I don't really follow bonds and I don't understand them too well. But you got real estate, stocks, and commodities are three that I understand well. Bonds I don't know that well. And they're all in a bubble. or the bubble started to burst as far as I can see. So I see it as a house of cards. That's my opinion. And if there's anything, any one little thing goes wrong, it's gonna crumble the whole system. Everything's gonna crumble. So, and who knows? Who knows if it's going to? Who knows if it's not? We don't know. Well, somebody might know. Certainly looks like it's going to. So, and then deflation, which is the opposite of inflation, right? Where prices come down, but that's not good either. If it's too much deflation, then what happens? Yeah, businesses aren't making as much profit. If they have to lower their prices, I know there's a Walmart just a little ways from me. I don't go there often, but sometimes I just go to there, grab some stuff. They actually had shorts for like, they're normally $8. They were selling for like $4. And usually when I'm at home, I'm tooling around, I'm just wearing shorts and a t-shirt, right? So I'm like, I'm going to buy some of these just to run around the house in, right? They're not pretty, they're not nice, but I don't care. They're comfy. They're just a nice cotton. It's like $4. They basically sell them for like 30 or 40 or 50% off. And that's what they did. They bought so much stuff. Now they're discounting it. So if you discount it and you lower the price, then your profit margin's smaller. So deflation is not necessarily good either. So it really is about finding that balance, right? Having, moderate inflation, a little tiny bit of deflation is okay, but being right in that, a little bit, 1 to 2% inflation is actually a good thing. So, William, yeah. Sorry. Yeah, one of them did actually. It was the Asian flu back in the 50s. That was a pandemic, and that apparently killed about 1 million people. I was just reading up on that earlier. It's interesting digging into some of this stuff, some of the history of it. But yeah, that definitely had a major effect, and it caused a recession for a short time. So I don't remember if there was any other ones in there, but no, that won't be number 13. Actually, it probably should be. I guess we should put pandemic on there. So, all right, we got about 15 minutes left. Oop, you know what that means. Let's if you got any tickers you want to look at, Hong Kong flu the 60s, maybe that's what it was. The thing I was reading about it was talked about the Asian flu. I don't know if that's Hong Kong. I mean, Hong Kong's in Asia, obviously. I don't know if that's politically correct or not, but I don't know what's politically correct anymore. It's like, who knows? You don't know what words are right. Okay. And I find the whole thing ridiculous. It's like, why can't we just leave things normal? The Qs, I'm doing a quick update. So we'll get up-to-date information. I don't know, where's the next, that says 4:30. Wait. Oh, that's the Qs. I'm looking at the SPX. I don't know what it's doing in real time, but it's all right. Yeah, it's down a little bit. I see the market's back off. I should have left my Russell alone, but that's all right. I actually did a spread. I haven't done a spread in a long time. So, well, I did some on Pepsi about 2 or 3 years ago, but that was the first time I'd done it in 5 or 10 years. But I'm looking at this market going, yeah, it's not directionally. I've done mediocre, not really that. I've given some gains back, trying to trade this thing directionally and getting stopped out a bunch. And it's just like, and you know what? Maybe I should shift to non-directional. So I just did a spread yesterday on the Russell, and it closed out a little bit ago I just knocked it out because it started a rally. I did a bear call on it. Should have got out first thing this morning, but oh well. Cost me an extra $50. Woo. So the Qs, that's pretty well up to date. What pattern, Brenda, you should know that. What pattern is that right there? It's not textbook, it's not beautiful, but we've got it, the beginnings of it at least. Good old evening star, right? At a resistance level. So there's the trend line that we've been in since the beginning of the year. So I would venture to guess, I mean, if you look at, if it does what it did last time, we had this bounce, right? When is that? March. We had that bounce for a little bit. It looks very similar, except that, this is kind of a V bottom. We got a little more bottoming out here, but we've rallied back up, and we've got not only the downtrend that's coming into play, but also that there's a support level an old support level right in that area, about 325, which is acting as resistance, at least at this moment. So, and interesting, we go back to weekly. It's kind of a head and shoulders, but it's not that pretty. So yeah, I think we got a lot of headwinds on this right now. I wouldn't be bullish on this at all. If it gets above that trend line and it gets above this, what's that, about 323, 325? If it gets above that level, if it can stay above that downtrend line and above this resistance level of 325, then I'd be bullish. At this moment, I'm neutral and maybe even bearish, depending on what happens in the next few days. I don't know if it will. I'd be looking for something like this. This is what I've been watching for the last week or two. And I think, at least, unless I find something compelling. Well, I do have, yeah, it hasn't hit yet. I got a contingent order out on City, but it dropped off a bunch. I don't think it's going to hit. I'll be watching for something like this. And we're up in this area. If we get a 4 or 5 or 6 day, or maybe a couple weeks where it just goes sideways like this, just like it did here, that's what I'm always looking for. I'm looking for any kind of candle patterns, any kind of indication that this thing's going to stall out here and it's not going to stay above it. And if it doesn't, and then the beauty of that is, let's say it does this here for a few days, it dances on this and hits the 323, 325, it keeps bouncing on it and it can't break above it. What? Okay. Wow. All right. Sorry. Order's hitting. I didn't expect it to hit. Actually, I guess I should have left it higher. I moved it down a little bit. Anyway, so if we get something going on here, which we have, kind of it's not really a hangman, but it's a little bit of a one. It's a half a hangman there. And then we have essentially an evening star here. So if we keep tapping this level, we can't break it. That's when I would be looking for a downside move. Mainly because the beauty of that is, this is what I love about it so much, is that your exit's clean and close, right? If it breaks above that 325 and takes off above it, then yeah, I would be bullish. So if you take a bearish position, then your exit's basically right there. Let's just do that. Let's set up a trading plan. I'm just going to make this 301 even. And see if this is working. I know Nick's been working on, one of the tech guys is working on a lot of this stuff in the back end. See if it's working. Okay, good. Calculator was out a couple weeks ago, so whoops, that's not what I wanted. I want that. So if you're not familiar with my style, I use the 3-to-1 risk reward. So the entry point would be 319.38. And I always color code these. That's why if you got 20 or 25 candidates for the week, whoops, just change the color. I didn't put the number on there. So I make red my stop, green's the target, and then orange, the only other bright color that made sense. Excuse me. So if this thing keeps dancing around here and it holds that line, in fact, I think see the 200 days up here a ways too. And last time it ran up the 200 day and it danced on it before it fell off. So that's why I'm going to give this a few days. Maybe next week we'll see what happens. But if it keeps hitting its head on there and it starts to fail, then I put a hook below it. And if it does drop, then that's a solid resistance level right now. You've got the old support right here. So it's acting as role reversal. Plus you've got this downtrend line that is, we basically have kind of 2 hits on it. So if it confirms it, then we're probably going down. The question is how far. And the beauty is that the stop is right there. So you won't get hit that hard if it does break to the upside. Brent, I'm going to grab a couple other people's stuff real quick and then come back to Apple and Amazon. BEO Bloom Energy. I just noticed can't believe time went by that fast. Just look at the big picture. I don't know. That's a long ways out. Yeah, neither one of those are really that relevant right now. So it looks like the next major spot is right here. If it breaks north of there, there's a little bit right there. That's pretty minor though. I also like to do this. I'll make it if I see it as a minor, like the solid lines are a major support or resistance that I see. If I think it's not that significant, I'll make it smaller. That way, when you zoom in like this, you don't have to remember what was back there. You go, oh, that's a minor resistance level. Plus, when you go through a couple hundred charts or 300 charts in a week and you keep looking at them all the time, it's hard to remember sometimes. So it's just easier to sink into your memory. So it's just one of those things that I know when I look at that, what I drew it for. Well, this gap wasn't caused by earnings. That's interesting. Looks like they come out next Tuesday. Was this a pre-announcement? I wonder. I don't know what caused that, but definitely some resistance there at 25. I wouldn't trade until after earnings. Unless I tried to do this on PayPal last week. I didn't try. I did it. It just didn't work. I bought calls ahead of time thinking, because it looked bullish anyway, that there was only 2 or 3 days till earnings. And I got out one day, it started to turn over intraday. So I took part of it out. I was hoping to get out all my initial capital and then leave some there for earnings, leave 1 or 2 contracts there for earnings in case it moves big. And of course it did. I paid, I think, $4.60 for the options. They went to $9 or $10 the next morning, but I cleared out because I didn't get all, I made a small profit on it. I just got out of the way. I wish I would have held it, but it's a 50-50 shot. You don't know. I could have lost it all too. So I don't know what caused that gap. Hard to say what's going to happen with earnings. And it's run too far too fast for me to play bullish. And with earnings, I wouldn't trade it bearish. So I wouldn't do anything with it right now from a technical perspective. I mean, remember, I'm just purely looking at charts. I don't know anything about the company. I don't know anything about the earnings. If you trade off of fundamentals like that, then you're on your own. Sorry, I don't know how else to put it. So yeah, I wouldn't be excited about the bullish side because it's gone too far. And I always go back to that, it sounds like a crazy analogy. If this is a hill and I just sprinted up it, I'm going to be tired and need a break. I need to catch my breath. It's maybe a weird analogy, but it works in my head for, okay, this thing's gone too far too fast. It's got to take a breather. It doesn't have to. I mean, it can keep going. Man. Who else was there? Spiders, Karen. Of course, this will look just like the S&P. Similar to the Qs to a certain degree. We have not really an evening doji star, but close. Well, and you can see the head and shoulders, which is not, it's not beautiful, but, and you could realistically, yeah, that's a little bit of a stretch. You could call this the neckline. If you want to call this a shoulder, or this part right here a shoulder, a little bit of a stretch, but excuse me. But very similar to the Qs, right? Oh, that's weekly. I want to be on a daily. Except that we're not as close on this. The NASDAQ bounced back big because it was so oversold. I mean, a lot of tech stuff got so beat down that having a big bounce was not a surprise. In fact, that's where we go back to the Qs. The only thing that makes it bullish right now is that we broke above this recent high, right? So we're technically in a very short-term nature, we have higher highs and higher lows. Intermediate term, in the last 6 to 8 months, we don't. We got lower highs, lower lows. Long term, we still have higher highs, higher lows. But on a short-term basis, we the NASDAQ Q, same thing basically, is in bull mode, but the other markets are not. They have not broken out above this high. I don't think the Dow has either, and I'm pretty certain the Russell hasn't. No, they haven't. The NASDAQ's the only one that's done it, which the NASDAQ was super oversold, so it's not a huge surprise. But it's close to its resistance line. The SPX, similar to the NASDAQ, it could, if it breaks above this level, I wouldn't be surprised to see it go to the 200-day moving average, which also coincides with another downtrend line that is only in place. It's not been confirmed yet. So the next week or two, what the markets do overall, if they hold this level, if they keep bouncing its head on that level and start to stall out like it did here, because this ride was fun. I don't know how many of you caught that. That was a lot of fun. This is stunk. This is all the profit I made, right? Not all the profit, but a lot of the profit I made right there. I've given back, I don't know, a lot, about half, I think, because this was just killer. And it was nothing more than looking at it going, okay, we've got a support level here. right? We broke that finally. We broke down below it, confirmed it for sure. We came back up here and we danced on it for several days. And I'm looking at it going, if it can't get above that level, then it's probably going lower. And sure enough, it did. Now, I didn't expect it to drop this fast. That was just dumb luck, right? But when you learn to see the patterns and, you've got a Harami pattern here, that a bearish engulfing pattern, and then boom, the next day we tried to get up there and then it gaps down again. And we got another Harami pattern there. And then the next day it tries, it fails, gaps down, it's just the writing after 4 or 5 or 6 days or a couple of weeks, even a bumping its head against that level and failing to get above there usually is a clue. And when you get some candle signals that say, here's a bearish signal. So that's kind of what I'll be watching for here, is to see if it keeps bumping its head on here and it fails to get through it. This is what, about 6 or 7 days worth. I would think that it'd be about the same. So I'll see. We'll see what happens this next week. And if it, like I said, if it keeps hitting its head on there and it looks like it's going to break down, I'll start to nibble on some puts. I'll start to load up on a little bit here and there. If I find stocks that are good, or even you can try to trade the spiders, I would start to add a few puts into it. Maybe just 1 or 2 contracts, 3 contracts with a stop up here. And then if it does break north, then you get out and it doesn't cost you a lot. But if it does break south, then you can add to it, and hopefully it tanks like it did. I wouldn't expect it to drop like that again, but there was some news and stuff that came out. I can't remember what, but does that make sense? Calculate it. Calculate what? How far it is? You know what the distance from here to here? If it drops back to there. Oh, put the plan on, you mean? Okay. You got it. That's easy. I've done it a couple of times. And this is all, if you're new to my style, this is literally how I trade. I find a pattern, I find something, whether it's even just something as basic as a role reversal, support and resistance, but usually I'm looking for some kind of pattern. I look for a bigger pattern for bigger trades, but then when it comes to a situation like this, where we're bumping our head on the previous resistance, I'm looking for some kind of candlestick patterns, just like we had here. And then all you do is put your stop on. Okay, where's the stop at? Well, we'll put it slightly above that high, enough to where essentially the question I always ask myself is, if this thing breaks north, if it breaks against me and goes the opposite of what I'm expecting it to do, at what point do I no longer feel confident that it's going to do it, right? So if we break above that 417 level, above these highs, we get up to this 419 or so, that's where I'd be out. In other words, if it breaks there, it's probably going to go higher, probably going to go up to the 200, possibly this downtrend line. And then the target is just basically the next major support level. And it could come down here to 370, which I usually will scale out of positions. So even if it breaks through here, I'm usually in some anyway. So stop is that. I'm just going to call it 390 to round it off, make it easy. And then 411. So basically have $7 of risk with almost 22 bucks of upside. 3 times as much upside as you do risk, right? And when you do it that way, you put the odds dramatically on your side, because you only have to be right 1 out of 4 to break even, essentially, right? So, and actually I like this, and I'll probably watch this now myself. I don't trade the spiders and Qs too often, but definitely I like the looks of them right here. So Apple and Amazon, we'll look at those real quick, and we'll get a call it a day. We're out of time. Apple is another one that's just on this crazy tear. Which, yeah, I got stopped out there. So I had to plan this old resistance support level 156. It came up and it rolled over. And so I got stopped out of this one. It's like, what is this thing doing? It's already ran from 130 to 155. It can't keep going. Sure enough, it did. So it's like, whoops. All right, well, I'll give some profit back. Oh, well. And now I'm just waiting. But you look at the last time it did this here. I mean, it ran really fast and then danced around, gave us a nice little head and shoulders right here, and boom, dropped. Came back up, little double top, another double top here. So I'll be watching for a pattern on any one of these. And this is, 166. If it can't hold that, it's above the 200-day. Interesting. So but these are going to look all very similar. You know, we've got it's at a resistance level, just like the Qs and then just like most of the major markets are, with the exception of the NASDAQ. So if it breaks above there, then I'd be looking for this line. If it holds this line, then I'd be looking at puts. Amazon's very similar too. Their earnings, they bolted, had 3 little days right there. So I'm not sure what that trend line is all about. That must have been on a weekly chart, I bet. But this one's actually above that spot already, except, well, there's a goofy part is you've got, I'll leave that right there. Yeah, that's gonna pop up. So yeah, there's the, you can see the amount of, well, 1, 2, 3, broke here, but it held, it recognized a little bit, but once it broke north of that 144 level, obviously split adjusted, but it kept hitting that as a support level and bouncing from there. So it didn't really recognize it in here, but will it recognize it now? Who knows? And where that moving average, see, well, there's the thing, the 200's coming in here, and it did recognize it last time up here. So we'll see what happens with Amazon, but very similar. You know, we've got some resistance, we got some headwinds, you got this big window that's open, that's earnings related. Will it close or not? Yeah, hard to say. But this is one I'll definitely be watching too, because Amazon, I love it now. Google's one that, this one's stuck in a range. This happened to pop up. I haven't traded it yet with a new split adjusted price, but Amazon's been a great day trader. At $2,000 a share, it's insane. Day trading 100, 125, 150 bucks a share is a little different. So, but it still has, it still can have some good moves. So I haven't even looked at Google options yet, but it came up on the radar the other day because it's stuck in this little range. I started to get a plan in there. I didn't finish it for whatever reason. So it'd be interesting to see what this thing does, because, and you could trade this range, and I'm kind of considering that. Didn't I already have one on there? Oh, I thought I did. That's on my trade machine. That's why. Where's the target? You know what? I put it right here at the close window there. Whoops. All right. I didn't miss anybody, did I? I think I got everybody's PES. We're just going to wrap up here with the plan, just for you, Brenda. Stop 145.65, target 125.50. So 140.61. So we got $5 of risk with $15 of upside. How much more would you relax if you knew that, you know, if you did 3 of these trades and one of them goes the right way, you lost $10 and then you made 15 on the other one. So you're still up $5 and you're only 1 for 3. Does that make sense? I mean, if you think about that, and I've showed this risk reward stuff. If you haven't seen it, go in here into the bonus videos right here. There's a video in there where I explain it and I show it visually so you can see it. If you haven't seen that before, go. Trust me, it's worth it. But think about that. I mean, if you think about, if you do 4 trades, right, and you make 15 on one, you lose 5 on the others, you've lost 15, you made 15, you've broken even on 4 trades. You had 1 workout, 3 missed. You were 25%. You got a 25 batting average, 250 batting average. Yet you're break even. So if you have 2 of them go in your favor and 2 of them go against you, if you're 50%, you've made $30 and lost 10, you're up 20. How much more can you relax though if you knew that as long as you have the odds on your side, you don't have to be right that often. And just let it do its thing. So who knows? That thing could run all the way back to 100, but that's I put it there at 125, and that's usually I put the entry point or the target a little more conservative, because if it does keep going, because I typically will scale out of something. If it's running and it's running towards a target, and if it goes there quickly, especially, I'm going to leave part of it there. If there's a lot of momentum and it might keep going, I'm going to leave and I'll just trail it then. That way you keep locking in profit if it continues to fall, and then you get, you know, these big drops like this, you get big windfalls if you do that. You know, I'll take up portions of it. I'll bank profit and reduce risk as it falls, but I'm always trying to leave some of it there in case something big happens. And then you get this huge windfall, right? Like you keep swinging the bat. And then eventually you're going to hit a home run. So, all righty, we got to wrap up there. So, as you know, if you haven't figured it out yet, then trading is not exactly the easiest thing you're ever going to do. In fact, I've said many times that it is one of the most difficult things you will ever attempt to succeed at. It's challenging, mostly because of the head, right? And learning to manage the risk and reward and learning to manage your mind is the hardest part. Reading the charts that's the relatively simple part. That's what Patterns of Flash is for, is to learn that stuff. And then coming to the classes and doing classes like this and learning to manage not only the numbers and the money, but learning to manage your mind is the biggest thing. And risk reward, as you saw it today, it's critical. That's the one thing where I really turned, where I went from nervous and anxious and being a mediocre trader to, okay, now I'm doing well. And I'm, for the most part, relaxed. I don't worry too much about the trades because I know I don't have to be right that often. I know if I plan the trade well and I execute the plan, I don't let things go crazy out of control, and I stop out when I'm supposed to, all I need is one or two of my trades to go the right direction, and the numbers work out. So the only way to fail in this business, as far as I'm concerned, is to quit. And that's where this came up from. If you're going to fail at just one thing, because that's one thing I've always failed at in my life. I'm a terrible quitter. Terrible. And that's usually, there's the old meme, I haven't seen it for a while, but of the two people digging, the one guy stops just short of the gold. And the other guy keeps going and finds it. So just keep going. You're going to have lots of challenges. You have good days. You have bad days. You have days you'll scratch your head and like, why am I doing this? Why am I putting myself through this emotional chaos? And there's other days where you just kill it. You have that home run and it's like you're on cloud 9, right? So yeah, we are. We're going off to, I'm headed north up by the Canadian border. So we've got a little, some resort place up there. We got a room for the weekend. So it's supposed to be hot here. So I didn't plan it that way. It's my kid's birthday. So it's kind of their quasi birthday gift. So, but it's supposed to be 15 or 20 degrees cooler up there. So, all righty. Y'all have a wonderful day. Take care. God bless. Bye-bye.